Hey, hi everybody. This is Sanchit from DrWealth. We are a wealth management company wherein we provide financial services, wealth management services to individual retail investors, HNIs, and also we provide tech solutions to mutual fund distributors and financial advisors. So today we will be discussing about tax harvesting as tax filing is around the corner. We will discuss how these techniques will help you if you have invested in stocks or mutual funds to save taxes. So let's understand first what are the types of taxes in India. So we have two types of taxes. One is short-term capital gains, and the another one is long-term capital gain. Under short-term capital gain, if you have sold any stocks or mutual funds within a period of 12 months, your gains or profits will be considered as short-term capital gain. And here the tax rate is 20% as per 2025. Last year, until up till last year, it was 15%, but since the last budget came, it was revised to 20%. Now long term capital gain, let's say if you have hold a stock or mutual fund for more than 12 months before selling it, your gains or profits will be considered as long term capital gain. Here you'll have to pay a tax of 12.5%, but you also have a 1.25 ka tax limit, tax exempt limit. So let's say you, if for example, if you've holded a ITC stock for more than a period of 1 year and you book a profit of 2 lakh rupees, on that 2 lakh rupees, 1.25 will be tax exempt, and the remaining delta of 75,000, you will end up paying a tax of 12.5% on 75,000. So let's understand what are the techniques wherein you can use these techniques to reduce your losses. So the first one is tax gain harvesting. So under this is the strategy wherein you book your profits up to a tax exempt limit, right? Uh, Over a period of multiple years. So let's understand with an example. So let's say you have invested 2 lakh rupees in HDFC stock for over a period of 2 years, and now the worth of that particular 2 lakh which you have invested is 4 lakhs, which means you have made a gain of 2 lakh rupees. And let's assume that you have sold this year at once. So if you have sold it, 1.25 lakhs is tax free. So on remaining 75,000 you will end up paying 12.5%, which is 9375 9,375 rupees taxes. Now, with tax gain harvesting technique, what you will do is you will not sell everything at once. You will only sell 1.25 up till 1.25 lakhs profit, and remaining you will sell next year. So let's say this year you just sold 1.25 lakhs ka profit. You will pay nothing on this 1.25, as this is a tax exempt limit. Next year you will sell remaining 75,000 profit, and again this will be not taxed because this comes under 1.25 lakhs ka tax exempt limit for next year. So this is the technique for tax gain harvesting. You can, so we'll discuss upon that what is the step by step process you can use this technique. First you can identify stocks or mutual funds with long term capital gain. Just make sure, just note down that this is not for short term capital gain, this is for long term capital gain. If you have holded any stock or mutual fund for more than 12 months, you sell only up to 1.5 lakhs in LTGC before March 31st this year, and again you reinvest in the same similar stocks or funds, and you repeat it every year, right? So now let's understand what is tax loss harvesting. So in tax loss harvesting, basically this helps you reduce taxable gains by selling loss making stocks to offset your capital gains. So again, let's understand with an example. So for example, let's say you have 1 lakh rupees STGC on from selling TCS, and you also at the same time you have 50,000 loss on Paytm stock, but you have not sold it. Now if you have not used tax loss harvesting, basically you will pay, your taxable gain will be considered as 1 lakh rupees, and you'll end up paying 20,000 rupees on 1 lakh rupees, which will be 20,000. And with tax saving harvesting, what you will do is you will book loss on Paytm by selling Paytm stock. So your net capital gain will be considered as 1 lakh rupees minus 50,000 rupees, which is 50,000. So you will pay taxes on 50,000, 20% on 50,000, which is 10,000 rupees. So if you compare both the scenarios, you have actually saved 10,000 rupees. You can combine both the techniques, tax loss harvesting and tax gain harvesting, by and reduce your taxes. Data suggests that around 5,000 crores of taxes have been saved in FY 2023 by investors. So so some key considerations before you use these techniques. First of all, you should consult an advisor. If you need any help, you can also click on a link below, reach out to us, we'll try to help you guys. uh, Also, long-term capital gain losses can be only offset against long-term capital gains, right? It cannot be offset against short-term capital gains, but short-term capital gain losses can be offset against both short-term capital gain and long-term capital gain. Also, when I told you that to reinvest in a similar asset after sale, just make sure before reinvesting you give at least 24 hours time period, because if you do the same day buyback, it will not it will get settled in your net PNL, so that will be not considered uh, under your tax gain harvesting technique. So yeah, this is all about uh, tax gain harvesting and tax loss harvesting. If you have any doubts, you can just comment below. And we are also planning to make a video on IndusInd Bank issue. So stay updated, and thank you so much.